Hey everybody, today is Friday, July 8th, 2011, and the market's closed here. We had a holiday shortened week, and it was a pretty volatile week, obviously, as well. So let's go ahead and take a look at that market here. The S&P 500, as we know, we were looking at a potential level of resistance here earlier in the week at 135. Let me just erase that and redraw it here. But that potential level of resistance that we were looking at 135 is something that we had exceeded on Thursday. Obviously, the ADP report people got excited about, and then the official jobs number today gave people another reason to look at the market, in whether it's so bullish or not. So we had a rough start to the day, and then it really was pretty quiet after that. The market came down really right to that level where we were looking for the potential, as if this market fell back, that 134 would be an area, that is if 135, that the 134 prior resistance earlier in this week, and so the resistance from earlier in the week, that might hold as support, and we did hold that rising 5-day moving average as well. A lot of people might call this an island top reversal, or something like that. You might see in a technical analysis book that you have island top reversal, or some kind of name like that. But the point is, we had an important level of resistance that was broken. The market came back down through that, and so far it seems to be holding up. Now, what I think is likely to occur is that we see a slow drift down towards about 132 over the course of the next week or so. I think that that happening next week is something that could be pretty likely, down where we see that 50-day moving average, and we'll start to see this 20-day moving average come up as well. We've known that the market was getting extended here, and that it was that it had a strong run, and we saw a slight correction through time, and then yesterday's gap higher as well. As I said on Wednesday, you didn't want to be shorting into this type of strength because there was no telling where the top was. Now, some of you might have shorted yesterday and got it right, and that's sometimes you get them right, but when you have a runaway trend like this, it's very difficult to know where it's going to end, how it's going to end. But this you could look at now as has been somewhat of a case of buy the rumor and sell the news here on the jobs numbers. So we'll be looking next week initially for a little bit of support, maybe now near about 133.25 or so, and after that, then of course, like I said, the 132 level is going to be our focus, because that's the level on the daily chart where we have that 50-day moving average, and that's where we would expect for it to kind of settle into. Now, it doesn't mean I would buy down there, but I would look at it and say, where what are the other potential levels? We could look at Fibonacci and say, from the recent pullback low to this high, well, that 132 level takes on a little bit of significance as well from a Fibonacci standpoint, because that's also the prior, or that's a 38.2% retracement. And when you look at it, we had a little bit of importance assigned to this level here over the last month or so, month and a half or so. So 132, then not to just use round numbers here, but I'm looking at basically what these Fibonacci's are showing me, which is 132, 131, and of course we know that 130 was where the real move began. We could maybe even take a Fibonacci off of this level. That's not really the common way of looking at it, but just out of curiosity, we did come down to a 38.2% retracement of that, and a 68.2% or 61.8% rather retracement of this move from the 130 break to the high at basically 135 and a half. A 61.8% retracement brings us down to that 132 level as well. So we've got a couple of reasons to think that 132 might be an area where people look to be a buyer, or cover any shorts that they might be putting on here as trades in this time. But very impressive recovery, obviously, off of that 200-day moving average in the last 2 weeks, and now it appears as though maybe it's time to absorb some of these profits. We weren't getting people were asking where's the controlled pullback here? Where's our opportunity to take a look at this and buy a nice disciplined control pullback, and it hasn't been there. So when we look at the Nasdaq made it to a new high for the year yesterday, which is pretty wild when you think about that, and came very close to closing to a closing high. The closing high for the Nasdaq 100 this year is $59.22. Well, yesterday we closed at $59.19. So just 4 pennies from closing at a new high yesterday, which was just amazing to think where we've come so far so fast. Once we broke past that 55.5 level just 2 weeks or so, what is this, 9 days ago? So 2 weeks ago is when this move began, actually on that Monday morning. But when we take a look at the intraday levels for the Nasdaq, this market obviously is held up. It was only down 0.27% today versus 0.75% for the SPY, but we're right up here at these multi-year highs in the Nasdaq. And when we take a look at some similar type of Fibonacci levels here to say, from the lows to the recent high, 57.25, 57.15ish would give us a level to look at, and then we can take a look at from the break of 55.50. 57 would be a 2/3 retracement. So this is a 2/3 retracement of this move, and from here to 57.15 would be a 38.2% retracement. So I would think 57 to 57.25 maybe would be an area where if the Nasdaq does see that this is going to pull back a little bit further, well, what else do we have in there? We have that 50-day moving average. So hopefully we could drift back down towards that 57 level right now, but we also have to look at that the Nasdaq behaved much better than the S&P 500 today. When we take a look at this prior level of resistance here, and what we were looking at as potential resistance at that 58.5 level on Wednesday, and then obviously we got above it. Well, what did we do? We came down and tested that resistance. This resistance actually became support today in the Nasdaq. So don't be too quick to look for a pullback here just because of one day where we were down 16 pennies in this Nasdaq. I mean, that's very very small. If you take a look at what happened in here, well, right away, right with the jobs report, that's when this market sold off, and we did have some recovery into the close with a little bit heavier volume towards the end of the day as well. So you take a look at it, certainly an extended market that we broke this little trend line, and we've got this extended look to it, and we'll see if the market can continue to move higher, or if maybe we're going to get a couple days of sideways and then begin to drift down to that 57.25 level. I think that's the key level for this market to hold up above, and we're still seeing that there's some great action in the individual stocks. And as I was trying to point out on Wednesday with my fireworks analogy, I wasn't sure if it quite worked, but when you have the market kind of shooting off all at once, there's still going to be that residual effect where some of the smaller stocks continue to have their run and continue to show some strength as people start looking at the bigger caps and say, well, maybe I don't want to chase those ones that have already moved so much. So their attention starts sinking down to some of the more junk type names, and you see some very strong moves where those really start popping off. As Today Trader says, it's they're like a popcorn market. The Russell 2000, we were looking for the potential of resistance in this area right here. These are the two lines that we had drawn and said that Wednesday the market was still showing strength. It's too early to sell it short, and we're seeing that this is maybe an important level in here that is going to have a little bit further meaning assigned to it. If we get a pullback in the Russell, let's take a look at what that might look like in terms of those two same Fibonacci's that we drew here using this Realtic pen. Anyways, if we take a look from the low down near 77 up to the high of 86, a 38.2% retracement would bring us down to this 82.65-ish area. Now, if we were to take a look at since the break of resistance, and this market did it, is, do we want to say it broke resistance here or at this point? So that makes it a little bit trickier. But we can see that we've got what looks like now a big giant mess. So I'm going to undelete that one. And then you can see here that actually a 61.8% retracement of this move brings us down almost to the same area. So I think 82.5 to 83. 83 has been an important level for this market, and we have actually 82 is where the 50-day moving average is. So I think that we start to drift slightly sideways to lower, then 82.5 to 83 would be our main area to kind of keep a focus on, and we could still see that this area in here is setting up as the neckline. A pullback down towards that 82.5 could create this right shoulder that gets this market back up to the all-time highs that it had just this year. So the Russell 2000 is still in a strong uptrend after bouncing from that rising 200-day moving average. And again, if you remember, we bounced from the 50, we bounced from the 100, and then we sliced through that 150. We were kind of looking for maybe a bounce in there. It came down to the 200 though, and really shook a lot of people's confidence. But that's where we got it. And the big group that I like to look at, of course, is the semiconductors. The semiconductors, as we know, this level in here, this 3480 is basically what I've been talking about. That's been the level that we wanted to keep an eye on in these semiconductors, because we had this prior level, and we can actually, if you remember, just kind of draw it back and see that it's been a pivotal area really in this level this year, and now we're kind of doing battle with this. We closed below that 50-day moving average today, but I don't think you can look at it as all bearish. We've got a rising 10 and 20-day moving average. We look at a 30-minute time frame, and we came down in this case. If we take a look at the Fibonacci off of the low to the high, well, that 38.2% retracement is down here at what is this, about 34.12, and let me just delete this off of here, and from the break of this 33.50 we can do another Fibonacci and just see kind of where that lands up, and a 61.8% retracement brings us into that same area. So in this case, 34.10 or so is what appears to be an important level, even down to I think 33.50. That was where this market kind of began to catch up to the rest of the market. It's still underperformed on a relative basis, but if we can can hold above 34, I think, and maybe a shakedown to 33.50, then this market could potentially recover back up. But you still have to look at it, I think, as it's bigger picture. It's range bound, and now we're back to the middle of the range for this year. Financials, we know that there's that line is still on there. We came up close to what's been a very important level for this market this year, near about $15.80. This support in here was tested as resistance. We got back up close to that trend line. We got back up to this prior important level, close to it, and pulled back a little. I don't think it's horribly bearish, but it's not really a bullish looking chart by any means. I mean, we have a break in this this is the big level, obviously, 1520. If 1520 holds, then I think that next week, then we can still kind of lean neutral to starting to turn bullish for the financial group, at least. The retailers had a huge recovery this week. In particular, on Thursday, they were up 2.5%. And that was just an amazing move, because we had seen the all-time highs here in this retail sector just 3 months ago, 2.5 months ago. And that was met with some huge selling that brought us down to that rising 200-day moving average. And this type of volatility is just amazing off that 200-day moving average. Anyways, the retailers, I think that you can still expect them to pull back down towards 110, 109 maybe, but still, very impressive strength this week from a lot of areas in the market. We had today, the breadth was basically 2-to-1, 2,089, 98 advancers, 884 decliners, but the market is showing that it's it's showing how difficult it can be to be short and stay short. It's in particular when you have a rising 200-day moving average. It's a very difficult thing to do, and be correct and make money. People say, and I saw someone, I forgot who reminded it yesterday, but there's a saying that the market takes the elevator or the escalator up, or the stairs up and the escalator down. Well, this time it took the rocket ship up, and if you compare how long it took to regain this type of strength versus how long it took to we basically were walking down the stairs there and just took the space shuttle back up. I would expect some settling in next week and a little bit more return to normalcy. But I think you can still look at some of those little stocks, and as far as opportunity goes for where there might be the place to make some money. And you can't trust those little names too much, but they can be a lot of fun. You can make some real nice quick profits in them, and I think that's where some of my attentions will be focused next week. I hope you have a good week next week, and if you had your week off this week, then I hope you're enjoying your summer break. Thanks for tuning in, and I will talk to you next week.